Hello everyone, and welcome back to another market review. This is Silent. Today we are looking at the NASDAQ December contract for 2025. We are starting off with the weekly chart, and if you remember from the Friday video, we were going to take wick quadrant measurements of the previous weekly candle and cast them into the week ahead. So as we opened, we gapped up and have traded up into the previous week's wick equilibrium and just missed the upper quadrant of that range. So going into tomorrow, I'm going to keep the expectation that we're going to continue pressing higher. I'll be more satisfied if we can get a closure above the 26,191 level going into tomorrow. On the daily time frame, we have that daily fair value gap here. Price has dropped into it a couple of times, and then we gapped up over the weekend and accepted back into that wicks range. We traded up through the 25, the 50, and almost got the 75% of the wick range. Just missed the Friday high on today's price action, and then came off of the high and closed lower. We left this up close candle today, so it's forming a kind of a consolidation. So I'm going to keep the bullish outlook, but I'm not going to force anything going into tomorrow. We'll keep a higher expectation, but we'll sideline if price ends up going into consolidation on the lower time frames tomorrow. On the 4-hour time frame, you can see that back and forth price action a little bit better. We have a 4-hour buy-side balance here, and this 4-hour buy-side balance here. Extended them through. You can notice the respect of that daily fair value gap on the 4-hour candle bodies here. And then we gapped up on Sunday, traded up into that buy-side balance. Had a indecisive candle here with a down close, and then rallied up and spent a lot of time delivering through the high of that 4-hour imbalance, but the body stayed inside this range. So until we get a obvious move outside of this yellow shaded area, I'm going to keep myself on the sidelines, and whether we displace lower or displace higher will tell me, whether we need to come back down into this discount range again, or if we can continue and break out for another all-time high. I'm watching this imbalance here for tomorrow as an immediate PDA rate to open up into. Alright, on the hourly time frame, I'm extending that sell-side imbalance into today's action. After we gapped up, we made equal highs here with the wick that was left on the afternoon delivery of Friday. Price came down through Asia, and after midnight we dropped lower into the new week opening gap and a strong response from it, coming back into the hourly SIBI and working the upper quadrant of this wick and almost delivering another high here, but it just missed it. We collapsed lower strongly on this candle, and then the very next open we respected the up close range here and traded back into the new week opening gap before pulling off of the low and consolidating going into the end of the day. On the 15-minute time frame, you can see how our Asia range has played out, delivering lower, and then we come off of that low here and then drop heavy into settlement. After gapping up like this on the new week open and shifting above this high, we can see this drop back down as a retracement and to go long off the new week opening gap during the London session. Price trades higher and recapitalizes that Friday sell-side imbalance and consolidates inside that range going into the open in New York. We run up into Wednesday's buy-side imbalance here and have a turning point. We collapse lower, leaving this imbalance open. Price redelivers inside of this range and trades lower again, creating this low as a breaker and collapsing into the new week opening gap. Then we come off of it, consolidate and retrace going into the Friday SIBI again, and then trade back and forth going into the close of the day. On the 5-minute time frame, we have that small bit of the Asia range open, transitioning into midnight. We start trading heavy and creating imbalances on the way lower. We retest the midnight opening price here and drop again, leaving imbalance. So retesting these ranges again is a selling opportunity going into the new week opening gap. We see that turning point after price shifts above this high. Doesn't leave an imbalance, but these wicks here are treated as a balanced price range with the breaker, and this old imbalance here, all of these levels nesting together, gives a great long opportunity right after the 3 o'clock of London. This brings us our rally going into the old new day opening gap levels, consolidation going into the pre-market of New York, and then a really strong pump up. We create this Judas swing going up and then drop heavily, and as the 10 o'clock news comes along, we utilize that as an accelerant to the downside, and that drops us back into the new week opening gap. It does not purge the lows here, but just retest the down close candle and the new week opening gap before pumping higher leaving a bullish imbalance here. And a lot of back and forth price action here, signaling that there's an accumulation going on. We rally up, shift structure. Utilizing this down close candle, we can be a buyer and trade back up into the new day opening gap ranges here. And then going to the close, we just consolidate and spread around. On the earnings report, we pump up and take out buy sell liquidity, and then settlement close back lower inside of that 109 price range. On the lower time frame, all I've done is bring in our first presentation fair value gaps of the previous week. You can study that in your off time of how price gives us our turning points. We leave the first presentation fair value gap of today open on the downside. Price drops heavily into our previous day first presentation ranges, and this is where consolidation and turning points are created as we go into those higher time frame levels. So we're utilizing these first presentation fair value gaps on the lower time frames to give us our price swings to deliver into the new week and new day opening gaps. So after we get our turning point here on the new week opening gap, price pumps higher and utilizes that same Thursday and Tuesday PM and AM ranges as a support level where we consolidate around. After we push away from them going into lunch, it's never retested until the retracement is complete. Going into the afternoon, we consolidate and create a turning point here. We shift under these lows and leave an imbalance. Price retests that a few times, accumulation of shorts, and that's what gives us our delivery back down into these Tuesday and Thursday ranges. And then after this is delivered, we come off of the low and consolidate into the earnings report, which delivers a rally on short-term buy-sell liquidity here. Alright, so that's going to be it for me today, guys. Hopefully you learned something. If you found anything insightful, please let me know in the comments. And as always, leave a like and subscribe. I will see you all tomorrow.